Welcome again to the learning portal for the DP accounting software. Database Providers, based in San Diego, California, proudly develops, distributes, and supports this software. In this video, we are going to talk about recording invoice payments. Our objectives are to define a receipt or sales receipt. Then, using the DP accounting software, demonstrate how to record payment from the invoice and record a payment for multiple invoices. Now let's get right into it. We need to explain some of the terminology we use in this video. An invoice is a document or record of a sale for goods or services. It is a request for money from a customer or third party for those products or services rendered. A receipt is a record of money received from the customer or third party paying the invoice's request. Some may also refer to this as a sales receipt. If invoices are generated and recorded in this accounting software, then the monies received from those invoices must also be recorded. Recording monies received must be linked to the invoice. If the invoice shows an amount due of $100, then recording the amount of money paid by the customer is critical. If the customer paid less than the amount due on the invoice, then the invoice will still have an amount due. If the customer paid more than the amount due, then the customer has a credit that can be applied to a future invoice, reducing the amount owed by the customer or third party. If the customer paid the amount due, then the invoice amount due, or balance is $0, or as some call it, paid in full. When recording the monies received from customers or third parties that pay an invoice, the accounts receivable balance is automatically reduced by the amount received. The balance of the accounts receivables is the amount of monies owed to the business at any point in time. Generating an invoice increases the accounts receivable balance, while recording the receipt of funds reduces it. Invoices indicate a payment due date. It is in the best interest of any business to make sure they receive payment for their goods and services on or before the payment due date. Recording receipts of monies includes the receipt date and amount paid, which provides insight into customers' ability to pay on time and in full. Special attention should be given to customers who struggle to pay on time or in full. All businesses run on cash flow. A positive cash flow is needed to sustain business. Keeping money coming into the business is just as important as managing what monies go out via expenses. For this video, we have created several invoices for the same customer. We will use these invoices to demonstrate the three options for recording payment or receipt from a customer. Let's begin by demonstrating how to record a customer's payment towards a single invoice. From the main menu, select View Invoices. For this example, we will choose the Copley party or customer. In reviewing the outstanding invoices by customer report, invoice number 10022 has an amount due of $125. This report was opened only to demonstrate that all invoices with a balance due are listed in the report. The payment received from the customer is to pay invoice number 10022. To record the receipt, double-click on Invoice 10022. With the invoice open, click on the payment option of check since the customer paid by check. Enter the receipt date. The receipt date should be the date on which you received the check. This date will not necessarily match the date on the check. The check date could be February 28th, but the mail delivery took 5 days, so the receipt date will be entered as March 5th. This receipt date is the deposit date in the bank register. Choose the account in which the payment will be deposited. Enter the check number. Verify the party and the invoice number paid, and enter the amount paid. If the receipt entry was opened in error, click the Cancel button. After reviewing the information for completeness and accuracy, click Save and Close. The receipt record has been added. The Transaction History section now shows the payment transaction, resulting in a balance due of $0. Click the X in the top right-hand corner to close the invoice. Invoice 10022 is no longer on the list of invoices because it is now paid in full, and the amount due is 0. Note that this invoice no longer appears in the invoices displayed because the amount due greater than 0 filter still applies. To view the invoice, remove the amount due greater than 0 filter. Since this invoice is now paid in full, it will no longer show in any of the outstanding invoice printable reports. Let's verify that this invoice no longer appears by opening the outstanding invoices by customer report. The invoice paid has been removed from the list. To close the report, click the X in the top right corner. To close the invoice view, click the X in the top right corner. As a result of this receipt transaction, an entry was made into the business bank register. To view the deposit entry, click the Register button in the banking section of the main menu. Select the bank account of this deposit. Scrolling down the list, sorted by transaction date, or in this example, the receipt date, the deposit entry is located. To close the register, click the X in the top right-hand corner. For this next demonstration, we will record a single customer payment that pays 2 different invoices. To use this method, click the Record Receipts button on the main menu. Choose the payment or receipt type. In this example, we will still select the same party or customer, Copley. Once entered, all invoices that still have a balance due will be displayed in the Open Invoices list, sorted by the invoice or payment due date. Enter the receipt date. Again, the receipt date may be different than the check date. The receipt date represents the date payment was received and is also used as the deposit date in the bank register. Next, select the account into which the receipt will be deposited. Enter the check number in the reference number field. Move down to the Open Invoices section and select the invoices being paid by this single receipt of payment. After choosing each invoice, the default amount paid for each invoice is the amount due. If the amount paid is different, edit the Amount Paid field to match the actual amount paid by the customer. Note that as the invoices are selected, the Amount Paid field in the top section is updated with the total amount paid. Verify the check amount equals the total amount paid. If the receipt entry was opened incorrectly, click the Cancel Receipt button to close the entry form. After reviewing the entry for completeness and accuracy, select Save Receipt. If finished with recording receipts, click Cancel Receipt button. To record the next receipt of payment, repeat the process. We will open the View Invoices to confirm they are now paid in full as well as removed from the Outstanding Receivables report. Let's look at the bank register to verify this receipt has been added as a deposit. Select the bank account. Scroll down the list to locate the entry. Verify the deposit and amount is correct. Click the X in the top right-hand corner to close the bank register. Thank you for watching this video. We hope that after watching, you understand the terminology of invoice, receipt, and sales receipt. Also, when using the DP accounting software, able to record payments sent in by your customers. You are able to record a payment directly from the invoice and also record a payment that pays more than one invoice. If you found this helpful, please like it below. In addition, please click subscribe below so that you can be notified when we release new videos.